Time for the market report. Markets trending down, but at least one commodity rallying big.
That's right, Mike, and it's one that's been dragging all year. We'll get into the reasons for it, but first, the numbers. What were the week's biggest gains and losses? And then, in our Row Report, economist Will Maples tells why one commodity is on a sharp rise. And finally, we talk cattle and pork with Sue Martin. So, markets closed trending down. Grain's the only real gain. Let's take a look. The week's biggest gain, soybeans up over 73 cents, nearly a 7% increase from the previous week. The week's biggest loss, lumber down 50 bucks. That's nearly an 8.5% decrease from the previous week. In this week's Row Report, I spoke with Extension row crop economist Dr. Will Maples about two issues. How's the harvest been going, and why have soybeans suddenly rallied? In the first, things are vague due to no USDA reports. But in soy, well, it's all about China finally buying.
So, we've talked a lot through the summer about how it's been a pretty ideal crop year across the country for corn and soybeans. We're looking at big crops, record corn crops, a record corn crop on the books right now. But it got dry coming into August through September in much of the Midwest, and we haven't really seen what that yield impact's going to be because we didn't get the October WASDE report. Kind of expected in that maybe we might see some yield decreases for the main or major crops in the country. So, going forward, hopefully in November we can finally get that information because we're just kind of in this black hole right now. As of until last week, China had not bought a bushel of soybeans from the U.S. this year. So we had not sold a bit of this crop we've gotten currently harvested to China. Finally seeing something materialize in terms of a trade deal with China is definitely a boost to the markets. I mean, that's kind of what we've been sitting around since April waiting on, is to see what China might actually agree to. So they got a framework of a deal in place. I don't believe it's actually been signed yet, but they're going to agree to buy 25 million tons of soybeans over the next 3 years, each year, 25 million each year, which basically is what they have been historically purchasing from the U.S. So that's just the floor, though. So it's good to know if the deal materializes, it actually does happen, that the market's got that floor to it at least. But, it's also going to be important, though, too, in this deal. They've been buying a lot from Brazil. The key is going to be to see where those tariff rates actually come down to. They've only got a 3% tariff on Brazilian soybeans, and they got a 23% tariff on U.S. soybeans right now. So depending how far that tariff actually does come down, do we stay competitive with Brazil at that point? Because at the end of the day, the economics is still going to drive these purchases. The private folks in China they're still going to want to buy the beans where they're cheapest. So kind of seeing where this deal actually ends up, how competitive we are against Brazil, is going to be a big key to if they actually meet these numbers.
In our livestock report, market analyst Sue Martin gets into the details on why cattle prices currently falling and what she thinks will be the turnaround point, along with what's currently moving the hog markets.
We didn't make the higher highs in September. Instead, we had an inside down month, and then we came back in October, took out the lows of September, and then flew and took out and made new all-time highs on every single contract, with the exception of taking out the August contract high in August. So the market, I believe, has topped, and the psychology has changed. And one thing we have to keep in mind, going back to 1975-76, every year, first off, in those years, I would have to say there were 4 other years similar to this one, where the June contract made the highs for the year. Then the August came up and took the June highs out and made higher highs. One of those years, now 2 of those years have made the high in August. One of those years put the high in September, one in October, and one in November. All of the years broke into December. And I think our market's going to go down in December. I don't care if we make an inside up month in November. I think it's going to roll right back over and fall. I think the one thing, so I'm thinking that he'll get a better chance to buy heifers cheaper next year than this year. Now, a year of a 6 We're ending a year of a 6 next year. All of them has taken, since 1975, 76, every one of them has closed lower at the end of a year of a 6 than you did at the end of a year of a 5. And I think the hog market seems like we're following with marketings and what have you, similar to what the pig crop report indicated. So the USDA might be a little more on target this time. But I do think the hog market's in line for a nice little corrective rally. Will it be one that holds us all the way into February? A lot of times you'll rally hogs into February, but I think you'll rally, pull back, and then we might try to make another effort. But I wouldn't sell hogs here. I wouldn't do that.
And that's it for a deeper look into the markets. Seems soybeans finally getting a break. It's about time, while cattle looking bullish for a bit.